Gold nears USD 5 an ounce as silver and platinum extend record rally. Global precious metals markets are experiencing an unprecedented surge, with gold prices racing toward the USD 5 per ounce mark, while silver and platinum continue to set new records. In Vietnam, bullion and plain gold rings have climbed to historic highs of more than VND 173 million per tael. While several major institutions forecast further upside for gold, new warnings are emerging over the overheated silver market. By the morning of January 23rd in Asian trading, spot gold soared to a new all-time high of USD 4,960 per ounce, up sharply from around USD 1,800 per ounce in the previous session. At current exchange rates, this level is equivalent to approximately VND 106.2 million per tael at the free market rate, or VND 157.8 million per tael using bank exchange rates. Domestically, Vietnam's SJC gold bars and major brand gold rings jumped by VND 4 million per tael to a record VND 173.3 million. This compares with around VND 160 million just 1 week ago and VND 150 to 152 million at the end of 2025. In just over 3 weeks, domestic gold prices have risen by roughly VND 21 million per tael, an increase of more than 14%. Silver prices have also surged, rising from USD 94 per ounce in the previous session to USD 97.3 per ounce, pushing the gold to silver ratio down to around 51. In Vietnam, silver prices exceeded VND 100 million per kilogram for the first time ever, with retail selling prices reaching VND 102.35 million per kilogram. Platinum climbed nearly 5% to a record above USD 2,635 per ounce. Palladium jumped 3.3% to briefly exceed USD 1,900 per ounce before retreating to around USD 880 in Asian trading on January 23. The sharp rally across gold, silver, and platinum reflects a convergence of powerful global forces favoring safe haven and industrially important assets. Chief among them is heightened global uncertainty, with rapid and unpredictable political and economic shifts prompting governments, institutions, and investors to adopt defensive strategies to preserve wealth. Gold accelerated sharply in late U.S. trading on January 22nd and early Asian trading on January 23 as the U.S. dollar weakened amid expectations that the Federal Reserve will accelerate interest rate cuts. In addition to political pressure from the administration of President Donald Trump, recent economic data have reinforced the case for monetary easing. The dollar's decline has been driven not only by expectations of looser Fed policy, but also by an ongoing global trend toward de-dollarization. Many countries are increasingly concerned about systemic instability as the global order is reshaped, encouraging a shift toward tangible stores of value, such as gold and silver. Geopolitical tensions have also played a role. President Trump recently stated that he had reached an agreement with NATO regarding Greenland, though details remain unclear. Meanwhile, rising public debt levels and aggressive liquidity injections across many economies have eroded the value of fiat currencies, further channeling capital into safe haven assets. Silver, in particular, has recently outperformed gold, driving the gold to silver ratio down from around 100 in April 2025 to roughly 50 today. Demand for silver has been fueled by rapid growth in industrial production, renewable energy, and high-tech sectors. In 2025, silver prices surged nearly 150%, and they're already up 28.4% year to date. Both London and Shanghai reported severe physical silver shortages last year. Gold prices are forecast to continue rising, though caution is increasing around silver. Since the start of 2026, gold has gained 14.5% after soaring 65% in 2025. Despite such dramatic gains, the market has yet to see a major correction, aside from a roughly 10% pullback in late October 2025. Goldman Sachs recently raised its 2026 gold price forecast to USD 5,400 per ounce, citing increased participation by the private sector in central bank-led diversification strategies. The bank expects central banks, particularly in emerging markets, to continue shifting reserves toward gold, with average monthly purchases projected at around 60 tons in 2026. In contrast, BCA research warned on Kitco that silver appears increasingly overbought. While long-term fundamentals remain supportive, the firm cautioned that the risk of a sharp correction has risen after silver gained more than 30% in the first month of the year, following its explosive rally in 2025.